Hello and welcome to the Bitcoin Butlers podcast. I am Mike Watkins, and with me, as always, my good friend and business partner, Matt Burke.
Hello.
And each week, we try and bring you an intellectually honest discussion about news and events affecting Bitcoin. If you like our content, please like, subscribe, and share. So, there was no real major news with Bitcoin over the past couple of weeks. Although one of the things that Matt, I know we both thought was really interesting was this Michael Saylor audio clip that we had
hmm
on Twitter Spaces with Bitcoin Archive. And what we would like to do is play some of that right now and then have a discussion about that.
Yeah, and maybe I'll just set it up a little bit, which is that many times on this show we've talked about the idea of Bitcoin being, one of the world's biggest computer network, if not the biggest computer network, the most powerful, the most secure, the most reliable, and we talk about these things. But Michael Saylor has a really kind of elegant way of putting some of that into perspective based on on what Bitcoin actually is doing in
Mhm.
terms of computing power and energy. So I thought we can look at that or listen to that clip, and we'll play it, and then at some point we'll pause it. But the first part, I think it's about 2 minutes of him talking about Bitcoin energy. So here we go.
Bitcoin's backed by nearly 300 exahash of hash power, and it's backed by 10.6 gigawatts of energy. Now, I say those words, but people don't even, it doesn't register with them what those words mean. So let me say it a different way. The United States Navy has 53 Virginia class attack submarines that have 30 megawatts each. It has 14 Ohio class ballistic missile submarines that have about 45 megawatts of power each. It has 11 nuclear powered aircraft carriers with about 195 megawatts of power each from their nuclear reactors. It's got 17 cruisers that run about 60 megawatts each and 62 destroyers that have something like 30 megawatts each. When you add it all up, right, the entire Navy, the nuclear Navy, it's running like 4.5 gigawatts, 4.3 gigawatts of power. Okay. So the Bitcoin network, we used to say that the US dollar is backed by the strength of the US Navy, by the power of the Navy. Well, it is. And now you know what the Navy is. The Navy isn't 10 gigawatts. Bitcoin is 10.6 gigawatts. It's like double the energy that powers the entire US Navy. Another way to think of it is as a full-on nuclear power plant might generate a gigawatt, a massive one. It's like 10 and a half full-on nuclear power plants running all out, but it's better because it's distributed everywhere in the grid and you can't identify where that energy. It's more distributed than the Navy. It's more distributed than the nuclear power plants. You can't stop it. And when you combine that.
Okay, so pause it there for a second. So, what are your takeaways there?
My first takeaway is that Michael Saylor is very gifted at delivering information. And as time goes on, he proves it's no fluke. And that was another, in my opinion, a classic from Michael Saylor. And it gives people an ability to think about the energy that it takes to power the Bitcoin network, particularly compared to when you're comparing to something enormous like the US Navy. So if you say saying like Bitcoin is powered by 10.6 gigawatts of energy, I think almost nobody knows what you're talking about. And I would include myself in that almost nobody category. It's just very hard to conceptualize what that amount of energy is unless you're used to those kind of terms. So the two things that I thought were really powerful in that was that you had the power of double the Navy, which is kind of one crazy way to think about it.
Yep.
Or the power of 10.5 large nuclear power plants. And this
At
energy
full blast.
at full blast, right? And distributed, it's decentralized. It's not really all over the world, but for the sake of this conversation, it's not in a single location. It is distributed. And those are some pretty shocking numbers. Really shocking numbers. And it gives you an idea of the scale of this network, that when people think of Bitcoin as being, what did Jamie Dimon call it? It's like some kind of, I forgot the terms he used.
Yeah, but a scam, basically.
A scam, right? And then you realize that this supposed scam is using twice as much power as the U.S. Navy.
Right.
And then you realize that there are some people taking this very, very seriously.
Well, and that's I think the perspective it gives is that you realize Bitcoin is not using that energy for no purpose. It's using it to secure the money and to secure the network. And so when you think of it that, okay, the energy use is there to secure the network, then you think about the fact that the network is being secured by twice as much energy as it takes to run the entire fleet that Saylor just ran through. And it's astounding. And then, I couldn't say, I have no reference point to say, well, how much power does a nuclear power plant generate? But, I would think that given that 10 nuclear power plants is a tremendous number, it's an incredible amount of energy.
For sure. And it really puts things in a pretty unique perspective, if you ask me.
Yeah, you want to keep going? He's going to talk about the other power behind it.
Mm-hmm.
And when you combine that, which is a wall of energy, with another idea, which is 300 exahash.
Did that audio come through or not?
It did.
Okay, sorry.
And that's computing power. That exahash is driven by silicon ASICs that have, when we last checked it, it's 2,200 times the computational advantage of general purpose computers. So it's a 2,200 to X machine or silicon ratchet that's running. And what does that mean? Well, that means that how much computing power do I need to catch up with the Bitcoin network? And the answer is all of it. Like how much computer power? All of it, right? If you took all of the computing power of Microsoft and Azure and AWS and Google and Facebook and everything, all of it, you're still not catching up, right? So what we've established is, by the way, how much Navy do you need to catch up with Bitcoin? All of it. All the navies in the world maybe are starting to approach the power of Bitcoin. And then all of the computing power of the world isn't 10% of the power of Bitcoin. Wouldn't dent it.
So this is about the computing power, the hash power, the number of calculations that are happening, constantly on the network. And I think we hit a new high of hash power within the past week, over 300 exahash. So we see that hash rate continuing to go up. It's gone up significantly just since Saylor had this discussion about it.
And did I hear him correctly that all of the other compute power together only equals about 10% of the Bitcoin network?
Yeah, that's what he said, that it was 10%. That, if you had all of AWS and Google and Facebook and Apple, pretty much all of the world's computing power, it's not 10% of the Bitcoin computing power.
Mm-hmm.
And that's just a function of ASICs. I mean, ASICs they're designed to only do one thing, and they're really good at it, and they're really powerful. And so
Mm-hmm.
when you have, however many computers you have running that hash rate, it's a very efficient use of those chips. So, the ability to generate a tremendous amount of calculations is just so far and above what any other computer can do. It's mind blowing.
Mm-hmm. And that's a testament to the power of the Bitcoin network. So when we talk about the Bitcoin network being the most powerful computer network in the world, these are some of the stats that would back that up. And they're pretty staggering. Now, in fairness, we don't know if these are accurate stats. We're going to, for the
That is
sake of
true.
this discussion, we're going to assume that they're accurate. And we've also yet to see Michael Saylor make something up.
Correct.
Right. I mean, he has a reputation he's trying to uphold here.
He's credible, generally speaking. I don't know if the exact numbers are correct, if the exact percentages are correct, but it's, at a minimum, it's based on things that he knows, not things he's making up.
Well, let's just say he's making it up. Let's just say that instead of the Bitcoin network having double the power or needing double the power of the US Navy, let's say it needs half the power of the US Navy. Okay, well, that's a lot of power. I mean, that's really a big deal. So even if he's off by 75%, even if you have to, or a factor of 300%, right? Divide his number by 4, right? 25% of what he's saying would be crazy. 20% of what he's saying would be a crazy number. And the same goes for the computing power, which is, he's saying, if I'm hearing that right, that all the other computers combined would be about 10% of the power of Bitcoin. And we also know that we've heard the stat before that if you gave all 8 billion people on the planet 100 laptops, that would be about the power of Bitcoin. So if we want to extract from that the fact that, they're nowhere near that many computers on the planet.
Sure.
There may be some more powerful computers than those 100 laptops per person. But I think if we were to extrapolate some of the math out, it would take us to around that same number. And I don't even know who can even calculate these numbers.
And at a certain point, I think this is what you're trying to say, is that at a certain point, it really doesn't matter. It's so much bigger than anything else that it's competing with that you can put it in a class of its own.
You can. And the other thing is that the hash rate keeps going up. And if you understand how it's going to work and how Moore's law works and things like that, the hash rate is going to continue to go up. And it's approaching, I mean, I just don't think humans can understand those numbers. And if there are some people with these freakish math abilities, I'm sure they're there, but it's difficult for most humans to understand 1 million. Most humans can't understand 1 billion. And I've never heard of someone that could really understand the concept of 1 trillion because it's such a large number.
Yeah.
And we're talking numbers far beyond trillions.
Quintillions.
What is a quintillion?
Yeah, it's
like
1,000 quadrillions, so 1 million trillion.
1 million trillion.
Yeah.
Okay. Once again, these are numbers that are just bananas. And it's really interesting if you think that before Bitcoin's really taken off, and we can argue how much Bitcoin has taken off, but I think that most people would acknowledge we're still so early. But if you think about the power of this network and how much time, effort has been put into, but more importantly, how many resources are being put into it. And this is after China banned it. This is after there aren't a lot of friendly environments around the world right now. And this thing is just a monster. It's very, very difficult to catch. And it's also experiencing exponential growth, I would argue, in the hash rate. And it's going to continue to do that. And the fact that you have these ASIC machines that are 2,200 times, according to Michael Saylor,
Mhm.
more powerful than a general purpose computer for the specific purpose. They kind of only do one thing.
Right.
They're a one-trick pony, but they're specifically designed to be a really great one-trick pony, and you only need them to be a one-trick pony. So the chips in a Bitcoin mining machine can't process 4K video,
Right.
can't do anything. They probably couldn't play solitaire, right? But
They can
they're
count.
they can count, they can guess numbers. So it's just a testament to where we are, and I think it's also shows how little people know about what's really going on. Like, if you wanted to say what's really going on around me, if you were to ask the average person, how powerful is the Bitcoin network? I don't know. Probably say, I don't know, no clue. Or if you ask the average person, what's the most powerful computer network in the world? Maybe they'd say
Right.
Google
Or what uses more energy, the U.S. Navy or the Bitcoin network? I mean,
yeah, I think that would surprise some people. Although I think with this this energy narrative that's going around right now, that like something where maybe the people in Bitcoin world don't want to really flaunt that so much. Although we know that Bitcoin uses the cheapest energy possible. It uses a lot of stranded energy. It uses a lot of renewable energy, and just the incentives of the network itself lead anyone looking to be profitable with this to find the cheapest energy possible. They have to
yeah.
find the stranded energy to
Well,
make it work.
I think that that's something that comes with, you know, starting to understand Bitcoin at a deeper level, is that in my mind, I want Bitcoin to use as much energy as possible,
Mhm.
because I understand the incentives for it to use energy and how those are structured in a way that is a good use of energy, and what that offers to, the overall energy landscape and the grid. Um, the more that it can, eat up in terms of cheap energy that would otherwise be wasted, the better off the overall energy landscape will be.
I agree. And I think that every energy provider, and I mean just about every energy provider, should have Bitcoin miners to stabilize their grid. We know what the benefits are. There's a financial incentive for them. So we can have a more profitable power provider. We can have a stronger power grid for the citizens. It's one of those things where everybody wins,
Yeah.
and the Bitcoin network's going to get stronger and stronger. Now, we know that uh, what's the famous line by Warren Buffett we've talked about on this show? Show me the incentive and I'll show you the outcome,
Hmm.
right? So if we're incentivizing power producers, power plants to have Bitcoin miners set up to help stabilize their grill and stabilize their grid and to provide uh, revenue from the mining operations.
Hmm.
It's just a win for society, and it's a win for the power providers. It's really just it's one of those situations where there truly is a win all around.
Yeah, I think we'll start to see things move in that direction. There's a lot of talk happening at various power company, you know, those I think tend to be different state by state. So it's not like there's a cohesive effort to try to implement something. It's got to go kind of down almost to the local level to be successful. But I think that we'll see that. That's one of the things that I've been thinking about, is that I think you'll see more cities and counties and, smaller municipalities that have some ability to control their own energy output. Um, I think they'll have big incentive to try to do this.
And it's a powerful incentive. I mean, it's one, besides for the revenue, just securing the grid. It's something that all the citizens, all the residents of those areas should be clamoring for. That's a benefit to the world. Energy is life. And if you could also, on top of that, pay the power company, the power company is getting paid. They're paying themselves to do
Right, they're
this.
creating a revenue stream, and that allows
Right.
them to invest, to improve the grid, to beef up the infrastructure, to do things that that they wouldn't otherwise be able to do because that revenue stream doesn't exist. And it's just it's a much better way to deliver the product to the customers when you don't have to worry about um, having to scale back electricity or tell people not to charge their cars or use their appliances or whatever. It helps people for sure.
Mm-hmm. Do you think there's a energy provider convention somewhere, like all the nuclear power plant operators and all the
I'm
power
sure.
operators? There must be something like that, right?
Yep.
I could imagine at one of their conferences, people getting up there and discussing how they can stabilize their grids and how they can increase their revenue by plugging in a bunch of Bitcoin miners.
Hmm.
And I think we've already had the first one, and from 1 it'll go to 2, 2 it'll go to 4. I think you'll see exponential growth in theirs because I'll ask you this question. Let's say you were in charge of Matt's nuclear plant, right? You have a 1 gigawatt
Scary.
plant.
Yeah.
Yeah, a 1 gigawatt plant. So what would you do if you knew this was an option? Would you want to install this at your gigawatt plant?
Well, given that I know basically nothing about how a nuclear power plant operates, other than the fact that it generates steam to turn turbines to create electricity, is basically my understanding of what it is. So, and I don't know how that works compared to like a more traditional electric company, but the answer is that if I don't have to run at full capacity, or if I have to build my power generation based on peak capacity, which causes me to have to run it hotter than I normally would in order to meet demand when it spikes, but I could actually offload that demand when it wasn't being used to mine Bitcoin, then it just makes absolute sense.
Agreed. So these incentives are weird things. It's one of those things that the more you dig into Bitcoin, the more genius you realize it is. And it seems to be there seems to be no end to this rabbit hole. Like the deeper you go, the deeper it goes, and you realize it's more and more genius. And I think the built-in incentives inside of Bitcoin are just brilliant.
Yeah, I agree. There's a little longer on that. I think, you want to listen to the rest of that clip?
Sure, I thought it was pretty fascinating.
Yep. All right. I'm going to put that on there. Hold on.
And then when you look at the cryptos, that attempt to compete, you've got a handful of proof of stake networks. And the last time we calculated, said, well, if Bitcoin is Mount Fuji, this next one is like a grain of rice. And the other one is like a housefly. Like you might, the biggest proof of work network other than Bitcoin, and it might be a toaster compared to Mount Fuji. And that's the good ones, right? That's the few dozen that the dozen that might actually have something backing them. And then when you go to the air tokens, the proof of stake tokens, what are they backed by? They're backed by 3 people, if you're lucky, 8 people, right? 2 people. FTX was, and SRM and SRM and FTT was backed by one person's whim. And so this is going to be such a teachable moment, right? So vivid when people say, what is responsible? Well, I want all the computer power in the world and all of the energy that the US Navy could muster, and I want it to be distributed across millions of nodes to defend my money. That's what Bitcoin is. And what is the rest of crypto? The rest of crypto is what Sam Bankman-Fried was, and what
So yeah, that was then the last part was his comparison to all of the other cryptos.
What was your thoughts on that?
You know, I think he's just, he loves to make these kind of obscure analogies. I don't know if the Mount Fuji compared to a grain of rice or a toaster is, I like the U.S. Navy analogy better. I thought it was more more enlightening, but I think what he's generally saying is Bitcoin is so far ahead of any of these projects, and he specifically is referring to ones that are, more established. Call it the top dozen coins other than Bitcoin, that may have some amount of longevity to them or some actual utility down the road. I don't know. I don't really spend time understanding a lot of those coins, so I can't speak to that. But I think the point is that that the Bitcoin network is so far head and shoulders above any of the other cryptos, and the decentralized nature of it is so much greater than any of those networks. And I thought that was an interesting point, is you've got, who knows how many nodes all over the world. And, those other top dozen cryptos, if you're lucky, there's 8 people in charge of it, maybe 2 people in charge of it. And that is a centralization of power that just doesn't exist with Bitcoin, which makes it much better in terms of kind of keeping it honest.
Yeah, I think it was, regardless of whether the analogies or the size comparisons are accurate, I think it's what he's trying to, when someone sees a listing for I'm going to call it a token or crypto on their phone. Let's just, we'll use FTX for this example, right? So you open up your crypto price app, whatever that's called, and it has Bitcoin on there, it has Ethereum on there, it has Litecoin, it has Solana and Cardano, etc. And then you can add in what you have, and let's say you add in, for the sake of this discussion, FTX. Okay. And so you open up this app on your phone and you see the different prices for the different crypto assets. And Bitcoin's one of them. Well, when you see FTX on your phone, and let's say it has a price of 100, you don't know, it doesn't really look that much different than Bitcoin on your phone, right? It's got different letters, it's worth less, but nothing can convey how serious or not serious, or how powerful or not powerful that particular asset is. Meaning, to a lot of people, they just look the same. It really makes no difference. And we know, because we've talked to people about this. And
Right. And a lot of people that view it that way are just, they're traders, basically. They're
right,
looking to be in and out of things, and to,
exactly.
to buy low and sell high and get lucky. And
Exactly.
that's different than what we're talking about. Yeah.
Very different than what we're talking about. And so my point is that with Michael Saylor highlighting this, it kind of gives an idea that Bitcoin at the top being Mount Fuji, and then FTX being there, and in size and power and support, it's like a grain of rice or a housefly or a toaster.
Mm-hmm.
And thinking of putting a grain of rice up against a giant mountain, I think gives the perspective. And I was actually thinking, as I was listening to it, that he could actually be right. Like, mathematically, that could be right. Like, the power of the Bitcoin network could really be that much bigger than some of these other just garbage, nothing things that just
Yeah.
kind of function, but they're not about anything really serious or purposeful. And then you have this unicorn that's out there. That's the world's most powerful computing network. Once again, the world's most secure, the world's most reliable, and the one that uses the power is a testament to how many machines are hooked up to keep it running.
Hmm.
And there's no one in charge of that. We just can't say that enough, that this is all decentralized. There's no one in charge. It's just an app that runs, and this app pays you in real money. And because the app pays in real money, and we say real money, the app pays you in Bitcoin, which we consider to be real money in a lot of ways. So
Hmm.
something that has a real tangible value. And if you want to convert that real money or that Bitcoin into fiat money, you could do so very easily. So obviously, it is a profitable thing to run miners. It's obviously more profitable at different times. It's obviously more profitable if you're paying less for your energy.
Hmm.
But it is most miners do profit on it. And not necessarily every minute of every day, but over the long term, we've seen the miners being profitable. And with that, I think we should pivot a bit to another area where the miners are making fees,
Hmm.
and that is the ordinals.
Yeah, this has probably been one of the hottest topics in Bitcoin the past few weeks. And we did talk about it on our last show, but just as a reminder, ordinal inscriptions are the ability to include data within a transaction by attaching data to a specific Satoshi and creating essentially an NFT on the actual Bitcoin blockchain. And there's been a good amount of controversy around ordinals because they do take up more space. They are not monetary in nature, meaning that you are using space on the blockchain to do things other than send money from one place to another. But the counter to that is the software allows you to do it, and with Bitcoin, you live by the rules of the software, um, and you can run whatever code you want to run. So if enough people decide that they don't like that code, then that's a different discussion. But I think our takeaway initially was that this is kind of a free market problem that will get resolved either by the market deciding that this isn't something that they want to support, or by allowing people to pay the transaction fees associated with putting these things into a transaction. And so if people are going to pay higher transaction fees to get their data inscribed into a specific Satoshi in a block on the blockchain, then they're going to most likely have to pay some sort of a premium for that. And then the last thing that is kind of one of the components of this is, what does this do, long term to the size of the blockchain? And I think we've pretty much determined that it's not really, that's not really a major factor. Even if all the blocks are full, then you're not looking at, somebody running a node running out of space imminently. But I think one thing that we've talked about, and maybe we can talk about a little bit, is what does it actually mean? Are we, by allowing these into the blocks, are we keeping other things that maybe are more relevant to the Bitcoin monetary platform? Are those getting kept out or taking longer to settle because we're loading the blocks with these other transactions?
Yeah, I think that's the $1 million question right now is, can these inscriptions or ordinals push out transactions, or are they just there to fill in the rest of the blocks? And I think I know the answer to that. We were looking it up and we couldn't find it, but as I think through it, I think that you just have a transaction on the network. And with that transaction, you're able to put a certain amount of extra data. And we already have services that are set up to help you do this, because one of the things we did discover as we were looking into this is that it's kind of a quirky and difficult process to do this. It's not very simple. And so people are paying $50 to several $100s, depending on the size, depending on the file size. So there's a business set up around this where others can make money. Okay. And because of that makes a little more seriously. And then Luxor Technologies acquired a company called Ordinal Hub to provide tools for Bitcoin-based NFTs. So I know neither you and I are very big into NFTs, but they're there. They have a thing. I don't know how much they're like trading cards. I have a friend who's really into trading cards, and all it really is a piece of cardboard with a picture on it and some stats on the back. But there's a giant ecosystem set up around that. And there are people that really enjoy it. And I think the same goes for these NFTs, that they may not appeal to you and me because we think they're trivial, but they are appealing to some. And I'd also like to add into that, and I'm going to ask you this question. The Genesis block of Bitcoin, January 3rd, 2009, contained the language "Chancellor on the brink of second bailout," or was it "Chancellor on the brink of bailout"? I don't remember, but it really "Chancellor on the brink ... right?
Yep.
So the very first transaction or anything that occurred on the Bitcoin network had an inscription,
correct,
by the creator. So it's hard to argue that this was not one of the intended purposes, the ability to send a message, if the creator did it with the very first thing they did.
Yeah, I mean, I think if you think of Bitcoin as a messaging system, it's it's like you write an email program, and this is the ability to include an attachment. It's a logical part of the puzzle. It's not necessarily something that it was designed to do for its primary function, and it doesn't seem like that it is the primary function of the network at this point. But like I said before, the software is written to allow you to do this, and so the market has to deliver its verdict on it. And the one other thing we didn't really talk about specifically is that I think the answer to the question, because I think it's a hard one to answer, is it preventing other transactions? Well, I think what it does do is it can cause overall transaction fees to go up. So it could cost you more to get your transaction confirmed, but that's the way that the Bitcoin network has always worked, is that there are different points in time when, depending on how full the mempool is, if you need to get something settled in the next couple of blocks, you have to set your fee high enough to where it'll get in there. And I don't know that miners are going to discriminate against the content of a transaction so much as they'll discriminate on the fee that someone's willing to pay. And if it turns out that miners won't accept transactions with inscriptions in them unless they have a really high fee, then that could affect the people that are doing the inscriptions. But it could also cause, if there's enough of them, it could cause all the fees to go up for sure. Now, I saw a thing, I think it was in the past week, that miners had made about $600,000 in fees based on inscriptions being included, which I thought was interesting. And that, and that close to 50% of block space is being used for ordinals. So it's if 50% of block space is being used, the question you have to ask though is how much block space was being used before that, and if there was excess space, which was a more common thing before this. If there was excess space, then is it really a bad thing for that space to get filled and the fees to be earned by the miners?
Yeah, I think that if you look at this in one way, the ordinals have not changed the rules of the Bitcoin network, right? They can't.
Correct.
They can only play by the rules that are there.
Mm-hmm.
So we know that if they're playing by the rules that are there, and we know that Bitcoin's open, then it's basically okay. There's no issue with it. I don't want to say it's legal, but it's not like someone's trying to hack it or do something that is not intended for. Now, we may think that it was not intended for this purpose, but what if we had a conversation with Satoshi Nakamoto, and he or she or they said, yeah, we wanted to have inscriptions in there. We wanted to be able to include things in there. Now, the block size has changed from what was done initially.
Right.
Right. But in today's world, if the block size goes from an average of 2 megabytes every 10 minutes to 3.5 megabytes every 10 minutes, it's really neither here nor there. And there's also been a thing talking about what's going to happen when the mining rewards go away.
Mm-hmm.
Who's going to be there to support the network? And what we're finding is that maybe this was one of the answers. I know that some of the Bitcoin maxis might think this is heresy and how can you have this and it should be transactions only. But if it's going to help support the network, if it's going to help increase the hash rate,
Mm-hmm.
then I say, sure, I'm all for it. And with the caveat that if it doesn't work out, they're going to soft fork it. Like if you break the toy here,
Right.
there is a solution. It's not a difficult solution to implement. And they'll introduce BIP whatever 349. People will vote on it. We'll see how that vote turns out.
Right.
But you need this overwhelming consensus. So I'm kind of moving on my opinion on the ordinals right now to where the last time we looked at them thinking like, okay, is this thing just a fad and it's just silly, like people are doing it just because they can? And now we've seen, 165,000 ordinals on the network and companies set up to do it, and a real shift in the block space. Like it wasn't a curve up. It was just a simple step. And this is the new reality.
Right.
And that new reality, the downside to the new reality is higher fees, right?
Mm-hmm.
And correct me if I'm wrong, but every transaction on the network, you pay for the transaction size. It's a fee per byte.
It's virtual bytes, and it's the way the fees work. Yes, the data that is included in the transaction determines the amount of fee.
But wouldn't the size of the ordinal then, if you've got a larger ordinal file, demand a higher fee?
Yes.
Right.
Well,
So
you'd be, but it's also the fee rate is really what's the kind of the important piece here that we're talking about, which is, how much are you paying per virtual byte? Now, if you have more data within the transaction, then you're going to pay more. Just
Right.
like if you have a multi-sig transaction, that's going to cost more than a single
Right.
signature transaction because there's more data in the signature block.
Right. But if you add a 200K file to your
Mhm.
transaction, you have to pay for all that 200K. It's a more expensive transaction, right?
Yes.
So you're paying for what you use. The network is set up that way. No one twisted the rules or anything.
And then the other thing that, we're not anywhere near there yet, but, I would argue that there could be practical applications for this. that there is actually, and the idea of the ordinals is you're tying data to a particular Satoshi. And there's actually a method of figuring out, the order of each Satoshi. And so you have the ability down to a very small, point in time to be able to memorialize something. And so, that may have a practical application. It could be a way to record public records, or, or to post things legally. I don't know. And maybe that happens on a different layer that then settles somehow to the main chain. I don't know. And I think that's, some of the, so I've heard this as both a for and against inscriptions, is that the data is stored on chain, so you've got this permanent record on the main chain, whereas with the Ethereum based NFTs, they're basically stored off chain, with just basically a hash that points to a transaction containing that data. So if you have the private key to that transaction, then you can prove that you're the owner of that NFT, but it's not on the actual main blockchain. So I could see that as being a plus or a minus. I mean, if it, but what it does is it actually establishes that property existing on chain, whereas
So if I were to send you a transaction with an inscription, and let's say that inscription is like 80K pixelized graphic NFT,
Okay.
right? That Bitcoin is going to go into your wallet, right?
Mhm.
When I send it to you. So how do you view that inscription?
I think you have to basically extract the data that's in the input of the transaction. So
go ahead.
Yeah. So within the block, you're able to, you put that data in the witness section, and then it can be extracted. I mean, I was actually looking at this like from a transaction basis. You can see if you go into a block explorer and you want to drill down into a block with an ordinal in it, you can see, have you ever had received a picture in an email and it got screwed up and all you see is a bunch of letters? It's basically that, but in the transaction. And so you could use that same, combination of characters to open that data into, a photo viewer that would show the JPEG. So it's and then there's also like a code that's A to Z lettering that associates that transaction with the certain Satoshi, and like and there's also kind of a protocol to that. So there's like all these little things that you can point to that kind of allow you to view that data. And and it doesn't have to be, visual data. It could be text. It can be, it can be software code. You could put a script into there. It's all kind, it's just any amount of data that you can send. It just has to be extracted.
I could argue that in some ways it's like adding a message to your Venmo transaction, right? So I send you $100 and I tell you it's for pizza, right?
Yeah.
And so that when you see the $100 come in for me, that it was for pizza. And I could see Bitcoin wallets being sort of like that in the future, that you see these transactions coming in and someone tells you what that's for. It's not so far-fetched. It almost seems like it's a good idea.
Well, look,
depending on what you're doing it for, right?
Right. Yeah. So like on Venmo, there are people that make their transactions public on Venmo. I don't know why, but if you scroll through that, but if you scroll through that, you'll see a pizza emoji attached to a payment, it's really not different than that. The difference is that the intended use. That's where the debate comes down.
Oh,
But if someone's willing to pay for it, and if putting the pizza emoji on the payment message is important enough to you to where you're going to pay an extra $1 to do it or however much, then that's the free market at work.
That's agreed. It's just there's no reason to get crazy with it, and you also don't know what the unintended consequences are for this down the line. Maybe they're positive, maybe they're negative. I think with Bitcoin, people are very, very sensitive as far as any changes, anything that's not pure Bitcoin on level 1, people get pretty crazy. Level 2 and level 3 solutions, I don't think people care that much. And that's for good reason. But right now, I think I'm kind of changing my opinion on the ordinals. And I'm okay with them for right now. We'll see where it goes. We'll see if there's bad things that come from this, because I could think of bad things that you could put in the inscription. I don't want to get into those here. I know you and I discussed those earlier. You can put all kinds of bad stuff up there, and maybe that's not a big deal. Maybe there's going to be services that come along and help read Bitcoin inscriptions, right? They'll go into the blocks and say, here's your picture at this thing. I mean, if I can imagine it, it'll be there, right? If I can think of it, someone's already building it. So right now, I think that the ordinals are a little bit fascinating, and we're going to have to see where this goes. But they're definitely taking off. If you think they're going away, I do not. I think that they've permanently changed the size of the Bitcoin blocks.
I agree with that. All right. What, anything else? What's our next topic?
Well, the only other thing we've seen going on is in Nigeria with their CBDC rollout, which apparently is going horribly, which is very, very, very good news, because CBDCs have, my opinion on CBDCs is CBDCs have no place in this world. They are just simply the end of freedom.
Yeah, I agree.
There's no reason for a CBDC except for surveillance and control. Money is digital already. Most people, when they're interacting with payments, aren't paying cash. Cash is a tiny, tiny part of things. Right. So we already have digital money. So all CBDCs do is add surveillance and control. And what I think is really interesting about the Nigeria situation is that the people aren't being fooled by it. They really don't want any part of it.
I saw that they were estimating that like 0.5% of the population had adopted the CBDC.
Yeah, it's very small. And I had a thought. I know Nigeria is one of the youngest populations in the world, but still, can you imagine implementing something like this and having people's money on their phones, which they don't understand, and also which the government doesn't have the technical ability to really provide. So they're actually they're having technical issues, and they're reaching out to a new company to try and implement this. And we've heard this discussion before from people who are, I think we heard it from one of the Bitcoin devs or someone like that, we may have heard this at the fireside chat that about CBDCs, that the government sucks at tech. And I think there's a really, really important thing here is that if the governments roll this out and there are errors and glitches and people can't get to their money, people freak out. This is not like other things. People get really, really touchy when it comes to money. And that's just genetically why we're hardwired that way as humans. Even other animals are like that, right? You have a dog with a bone. You take that the bone away, that dog's going to bite you.
Sure.
You had a dog that bit me when I took their bone away. I was dog watching, and the dogs that I knew really well, and they had a bone, they didn't want me taking it away.
Yeah.
So this is just wired into animals. And so when you have that kind of stuff, that's something you can expect. And so I'm all for the CBDCs rolling out and crashing and burning as much as possible. And I'm happy to see that in Nigeria. But there's another interesting happening in Nigeria, which you got to the bottom of, which is this rumor we've been hearing that Bitcoin is trading at like 50% higher rate, like Bitcoin trade about 36,000 a coin there,
Yeah.
because you can't you can't use your government bank accounts to buy Bitcoin. You have to do it peer to peer.
Mm-hmm.
And so people are charging a premium for that. And in a country which is starting to get the CBDC, it's very interesting to see how they are turning to Bitcoin and how Bitcoin becomes a premium asset, an asset people are willing to pay a premium price for above market rate. And this has been our thesis for a good while now, that don't understand Bitcoin. People are not going to understand Bitcoin. People don't
Right.
want to spend 100 to 1,000 hours studying Bitcoin to really get their head around it. But what people can understand is money that I'm free to use and do whatever I want, and money that I may go to use and find it doesn't work.
Mm-hmm.
And those are two very, very different options. And that's what people will understand. Freedom money versus government controlled money.
Yeah, absolutely. And you're seeing that, and where the numbers got off a little bit on the premium that people were talking about is that the pricing, kind of the exchange rate they were using for the Bitcoin, was tied to a Nigerian currency that is not really stable and is not what it should have been compared to. And there was somewhat of a premium, um, but it wasn't as big as it was made out to be. It was just that it was kind of being priced incorrectly based on some more volatile currency. But I think the more interesting story is, like you said, the CBDCs. The other thing is that one of the reasons that a lot of those transactions are increasing in terms of the peer-to-peer Bitcoin buying, they did also limit the amount of cash that you can get. There's almost no cash
Right.
available. So, people were lining up at banks to try to get money, and they've put maximums on withdrawals and that kind of thing, or if you can even get money at all. But it's so that's really, anytime you see the financial system kind of choking people out of their banks, you always see somewhat of a flight to Bitcoin. We saw it in Canada with the truckers. We saw it in Ukraine when people were leaving, and we're seeing that here now.
Mm-hmm. Yeah, it's anytime that happens, people really lose their minds. They
Yeah.
really, really lose their minds. And I think that's great. That's what it takes for people to understand it. People don't really understand it before that. But all these things are just other steps for Bitcoin to me, right? Every time something happened in Canada, people got a certain realization. Then we had Nigeria on the other side of the world. People got that realization. And it seems to be pretty easy for people to digest. Like even during the Canada thing, there were people turned to Bitcoin because there weren't other options, and the Bitcoin worked, right?
Right.
So the government was able to take the other money, freeze the other bank accounts. And what options did those people have? And without Bitcoin, it would have been next to nothing. I mean,
Right.
they could have gotten cash. People could have rounded up cash, but they were shutting down the ATMs in Canada
Yeah.
at that time.
Yeah. And that's
So-
the other thing, is that we don't know really to what extent the banks were cutting that off. You're not going to hear about a bank run.
Mhm. So we'll see how that plays out. That's interesting, and I think that's some pretty good news. The rolling out of the CBDC is not good news, and we're going to see almost every country do it.
Yeah, but
And
the
hopefully they
lack
don't
of
fail.
adoption and that was the other thing in one of the articles I read, that the Nigerian government's actually hired a tech firm based in New York to help them kind of rework this failure of a launch.
Great.
Yeah.
All right. Well, Matt, can you tell people where to find us, please?
Yeah, you can find us at our website at btcbutlers.com, on Twitter at btcbutlers. DMs are open there. You can email us, info@btcbutlers.com. Like Mike said in the beginning, if you liked this, please like, subscribe, share, tell your friends, send us questions, make comments on YouTube. We'll try to address whatever we can. And if you are a Bitcoin owner or new to Bitcoin and you want help implementing Bitcoin best practices, such as how to buy your Bitcoin, how to store your Bitcoin, doing an inheritance plan for your Bitcoin, and running your own node, Bitcoin Butlers is here and happy to help you do that. So if we can help you, please reach out and we'll talk to you next time.
Thank you, Matt.
All right.
Enjoyed it.
Bye.
Bye.